Hello, hello. Hey, everybody. Hey, everybody. Diesel, my dog. He stay in the way. So, quick question to y'all. Hopefully, y'all are having a really, really great. No, sir. No. Sit down. Diesel, sit down. I don't know what's up with like the kid and the dog. 1 minute it's the kid, Ladybug, that wants to jump into the lives and want to do stuff as soon as I start going live. Now it's the dog. Laura isn't in here, now it's the dog. So anyway, I hope y'all are having a really great day, and you've been having a really great trading week so far. Prayerfully, y'all are having a really great trading week so far. We're going to talk about these markets because y'all for all my traders out there, I know investors are like, ugh. But those of us that trade, we just like, God, dog, like, can y'all make up y'all mind what you gonna do right now? Like, that's how I'm feeling. Not even gonna lie. So I've been talking a lot about crypto on YouTube and on TikTok, and so I wanted to talk to you all today about trading because, of course, I started trading first. So we're gonna move forward into what I normally do, which is chat about these markets. That is not the correct one. Where is it? There we go. Okay. So that's the one we're supposed to have. All right. So we are on session 46. We've been doing this consistently for 46 sessions. I know I've missed a few, but it's okay. We're going to keep it moving. So this quick disclaimer, and then we're going to go into a bit of housekeeping, but quick disclaimer first. Trading and investing in any market can contain substantial risk and is not suited for every individual. Every trader and investor learns and performs differently, and that's why our results will not all be the same. There is a potential for a trader and investor to lose all or more than their initial investment due to numerous factors. Therefore, it is suggested that each trader and investor only invest money into the market that can be lost without jeopardizing their financial security and or lifestyle. Remember, y'all, we don't want to put our retirement funds into one particular market. We want to diversify, but definitely we don't want to put all of one particular lump sum of money into one market, okay? Remember, y'all, I am not a financial advisor. I have to make sure I say that every single time because I don't want anyone to think anything else. I'm not a financial advisor, nor am I a licensed trader. I don't work with or for the CFTC here in the United States. I am independent. I do what I do, y'all. I'm a student, but what I do is I share information based on my personal experiences as well as people who have learned from me, sharing some of their experiences as well. And I'm only sharing information for educational purposes only because the expectation is you as the viewer that's tuning in either live or the replay. The expectation is for you to do your what? Your own research. So anything that I share on this channel, on this Facebook page, anything that I share on here is for you all to make sure you do your own research. Okay, so any strategies discussed, any services or products shown, you would do so at your own risk. You're going to engage in those things at your own risk. And that final note that I always say, past profits do not guarantee future results. Okay, so I want to make sure everyone is clear as day on that. All right, so let's get into real quick some of the formalities, y'all. If you're joining me on Facebook, y'all can like the video, share this live as well, and then comment things that you're learning, things that you've experienced this week as a trader, things that you've experienced. Even if I have some investors that's tuning in, put in here some of the things that you've noticed as an investor this week so far, okay? And y'all, let me know where y'all are tuning in from. Like, put your city, put your state, put your country. If you want to rep your country, whatever it is you want to do, put that in the comments as well. YouTube is a little bit different. I need y'all to give the thumbs up first, okay? Then, after you give the thumbs up, then, of course, you can comment. Hit the subscribe button as well as press the notification bell, especially if you are not part of the Prosperity Cause community yet, okay? You want to know when I'm going live, pressing that notification bell will help you to know. It will send that notification to you to let you know when I'm live. But I'm going to tell y'all something. Sometimes, these spaces do not do that. So keep that in mind when you're hitting those notification bells. If you're part of the community, you'll get an email. And then there are times where I also send text messages out to certain segments of the community. Okay. Now we got all that out the way, all the formalities out the way. Let's talk about some Forex news. So I'm going to read an article I just came across. It actually came out like an hour and a half ago. But these tariff wars, like there's a huge fallout here in the United States because today, April 23rd, 2025, 12 states are now suing the Trump administration in the United States Court of International Trade in New York. And the purpose of them doing this is to stop the tariffs and to deem them illegal. Now, will they be successful in that? That's not my lane. All I'm doing is letting you guys know because we want to make sure that we are aware of what's happening in our country. And as traders, what does that say for the things, or what could that signal for the things that we are going to trade and or are currently trading? What kind of message is that sending to the investors? What kind of message is that sending to the traders? Okay, and I'm not talking about us retail traders. I'm talking about these hedge fund managers, these big money traders. These are the people I'm talking about. What message is that sending to them? Because they're the ones that move the market, truth be told. Okay, so those 12 states that actually went and filed today and are suing the Trump administration, it is Oregon, just in case you didn't know, Arizona, Colorado, Connecticut, Delaware, Illinois, Maine, Minnesota, Nevada, New Mexico, New York, and Vermont. Okay, so if you're in any of those states, hopefully you already know this, but if you didn't, there you go. All right, now here's what I want you all to pay attention to. I said this the last time that I was live. I know I missed last week because there was some scheduling conflicts, and I thought I could do it later in the evening. That turned out I wasn't able to do that, so I just said, you know what? I don't want to keep saying I'm going to do something and I can't, and things are coming up. So I just push pause and come back this week, right? So the week before, though, I shared what can be significantly impacted by these tariff wars. And in this case, there's a fallout that's happening within the United States, plus the talks with China that's happening. And supposedly now the president, United States president, is expecting or anticipating a drop, lowering the tariffs into China. So, we did a whole lot of talk for what? But anyway, so these are some of the things that we typically trade that can be impacted. So if you weren't aware of it, anything paired with the US dollar, when we're talking about the currency pairs, okay? And we're talking about the major currency pairs, even some of the minors. I'm not talking about exotic, so I'm not talking about trading like the won and US dollar, things of that nature, because that's not stuff that we typically trade. I'm talking about your majors and your minors. So Euro USD, GBP USD, USD CAD, because there is still the tariffs being imposed on Canada. Okay, so USD CAD, so on and so forth, as well as some of our precious metals. So gold and silver are being impacted. I don't know if you all noticed it, but gold shot up significantly this week and made another all-time high. Now, today it did eventually bounce back and pull back down a bit, but I would not be surprised with everything that's been going on in the country right now that gold doesn't continue to create new all-time highs and new all-time highs. All right. Now, the next ones that I would say will be significantly impacted, which some of you may have seen, especially if you are investors, and that is US 30. For my people in the stock market, especially investors in the stock market, that's equivalent to the Dow Jones. All right. The NAS 100, again, in the stock market, that's equivalent to the NASDAQ. All right. When we're talking about trading for us. And lastly, SPX 500 for those of us that trade. But again, in the stock market, that's equivalent to the S&P 500. Hopefully everybody got it. These things you should have already seen that the market has moved significantly this week in particular because of all the back and forth between the United States president and Jerome Powell, and then of course the whole back and forth with the tariff wars with China. The 1 minute we're going to be imposing this percentage of tariffs, and now we're considering lowering it, but it won't be zero. Like we need to make up our mind what we're gonna do, okay? Because honestly, the market is like terrified and it's chaotic, and you can see it when you look at the chart. So what we want to do is just make sure that we're keeping an eye on these things, as well as, if you all did not notice, this past week, Bitcoin actually was attempting to creep to 100K. It surpassed 90,000, which it hasn't done in a long time. And so we see even today, it's still a bit above 93K. So could it go back to 100K? There's a possibility. But again, all you can do is just continue to look. And that's what we're going to do tonight. All right. Come on, Ladybug. Come on, Ladybug. Here you go. You're welcome. So that's what we're doing. That's what we're going to look at today. All right. So we have all of our things that we're going to be paying attention to. And I'm going to go to the chart so that way we can mark them up together. I need you to, yeah, there you go. Well, I'm live. You want to go in your room? Okay. So next up, we're going to talk about the news for tomorrow. Okay. So if you did not catch it, I'm lowering my voice of my child so that when she doesn't put the TV up super loud, because I am live streaming. And I told you that before. Okay. So tomorrow's news outlook, this is what we're looking at. Listen, y'all, as a friendly reminder, if you're seeing a red folder, y'all, red folders mean that this is high impact news. Here, I need you to change it to your channel, okay? Okay. Thank you. This is high impact news. All right. So what that means for anyone that is new and just joining, what the red folder means is it's high impact. So there's a possibility that, let's say you're in a trade. This is for US dollar, right? Tomorrow, it's unemployment claims. So let's say you're in a trade for a buy with USD/JPY. I need you to cut that down some. Thank you. No, I need you to cut it down. Thank you. So, yeah. So when you see a red folder, that just means there's pretty much high impact news. So let's say you're in USD/JPY, right? And you're in it for a buy. Okay, so you're anticipating the US dollar is going to maintain its strength and that USD/JPY is going to continue to go up. And this is where you're going to profit at in a buy, right? Well, let's say these numbers are not favorable for the United States and it is actually negative, right? So instead of it being in a positive, you see the results are red, the numbers are red, and it's a minus sign that shows up here. So it's not good for the economy, right? The unemployment claims is higher than anticipated. That's not a good thing. So what would happen is the US dollar in that instance at that moment would be considered like weaker, not weak, but weaker. And then you may see a sale occur with USD/JPY. Now, the length of time that that's going to happen, it totally depends. It's going to fluctuate, okay? But what I want you to know is when you see these red folders, you need to be mentally prepared to either not enter a trade because you're not in one yet, okay? Or you could say, you know what, I'm in profit and I can either exit out the trade and profit, or I could put something called a trailing stop loss in, secure the profit that I've already gained. And if the numbers are favorable for the United States, then it could continue to go into that buy. I could continue to make money. If it's not favorable, it will hit my trailing stop loss where I've already secured some profit. It'll hit that, kick me out of the trade, and I still make money no matter what because I put it into a profitable state. Okay? So when you see red folders, it's high impact. Orange folders is similar. It's medium impact. But for me personally, I have learned in my own experience, hey, look, that's not it. It's not going to work. I just stay away from the market. So if I'm not already in a trade, when there's an orange folder coming up, then guess what? I don't get into one. Okay. If I'm in one and I'm in profit, then there's a possibility, depending on how much I am in profit, I may either go ahead and just take my profit and close out and just go on about my day, or I may put in a trailing stop loss. Those are my two options, okay? But again, it's totally up to you. I'm not a financial advisor. I'm not a licensed trader. I'm just a student, and I'm telling you all what I have done and what has worked for me, okay? So that is the news for tomorrow. Govern yourselves accordingly, all right? So now what we're going to do, we're going to go to the charts because I want us to see what the market is telling us when we're looking at certain things. So remember, y'all, there are certain things that we trade consistently, and that is USD JPY, that is gold, and that is SPX 500. Y'all, I do trade cryptocurrency, so I personally look at Bitcoin, but I know not everybody does that. Ladybug, come in here and let Daddy be. Thank you. Go ahead. So there we go. So that's the reason why you won't see me mark up Bitcoin on here, because not everybody trades it, but I will go ahead and do SPX 500. So this past week so far, we've seen that the market did have a sale occur, but it turned around. Okay. And this is again when all of the talks about the United States lowering the tariffs. You got to get a napkin, please. No, talking about the U.S. is considering lowering the tariff percentage for China. It's not set in stone, but it's conversations of it possibly happening, and we don't have that back and forth right now with the potential of the U.S. president attempting to fire the Federal Reserve Chair. Jerome Powell, okay, even though we don't know if that's even something he can do, but nonetheless, this is the stuff that has occurred this week, has been very heavy in communication, and that's why you see that the market has moved into the opposite direction. Okay, there is fear that causes these things, and then also when the price of things go down, y'all, the people who are really heavy into investing, they see, hey, listen, the market has went down 10%, 15%, 20%. If it's down 20%, this is my opportunity, prime opportunity to buy. If it's down 25%, this is a prime opportunity for me to buy. So I'm just going to show y'all something, and then I'm going to update this chart. So we're going from where it was last week, Monday, to here. So the market had dropped down 6%, almost 7% in 1 week. Actually, this was Monday. So in 1 week, the market had dropped down, as far as SPX 500, the market had dropped down 6%. That's pretty big. That's honestly significant for that. But then it also went back up. Okay, so it rebounded and regained those, or recouped those losses that it incurred, and actually brought in a bit more earlier today. But we back down. Okay, so let's go ahead. I'm going to update this. So that way, I believe I did April. I need to do the week. So I'm going to do this. So here's the thing, y'all. I'm going to close y'all out Facebook. If y'all want to tune in to see this live, like see me mark up, then I'm going to need y'all to come to YouTube. Okay. So y'all have a good one. Prosperity College YouTube channel. That's how you'll be able to see me mark up the charts. Okay, 1 second, y'all. I'm just trying to close them out. All right. So let's do this. Get that off of here. Lord's listening to her stuff. All right. Okay, so let's go. All right, I got that closed out. So now I'm going to update. I'm going to do what we call a top-down analysis. So for my people who are not familiar with the top-down analysis, all this is you're looking at higher time frames to see where price has been and where price has the potential to go again. But what I do is I personally mark the high and low of that previous week. Okay, so I'm going to show you guys where we are currently, what this week looks like, and then I'm going to identify the previous week. And I do that with everything that I trade. Okay, so there's USD, JPY, gold, Bitcoin, everything that I trade, I do the same thing. Okay, over and over again. So this is the current week. This is where we are. Let me make this a bit bigger here so y'all can see it just fine. This is the current week. This green candle is our current week, and this red candle is our previous week. Okay, so now what I'm going to do is I color code my lines so that way I know what color represents which time frame that I marked on. So this North Carolina blue that I call it, this is my week. So this is the previous week high right here. Give me a second to get on there. Bam. And I'm going to delete this out of here because I don't know what it's going to be yet. Okay, and then this is the previous week low up here. So we see that price this week has actually gone past that a bit, but it's closed above it, or it's closing above it. Okay, so I just want to make sure that I'm on the line, which I am not. Let me fix that. Now I'm too high. Come on, there we go. All right, great. Okay, so let's go. So now I have the previous high, which is here, and the previous low, which is here. Okay, I'm keeping this line because this helps me to identify what happened to the market after the United States announced that there will be a 90-day pause on those tariffs. So now I know where the 90-day mark should be. I should have an idea. Okay, this is when it started. 90 days from here is here. What did the market do in between that time? How did the market react to the announcement in between that time? That's for me. I'm one of those people. I'm going to leave this on here, okay? So now I have my week high and my week low. Let me move that EMA out the way, okay? Now I'm going to do the same thing for the previous day. I'm going down, okay? So the day is yellow. That's the color for me. So I'm going to change this. I'm going to delete this out of here. And then I'm going to unlock it. I did already. And I'm going to move this down. Okay, so this is the current day. This is where we are right now because the market just reopened back up at 6 p.m. Eastern Standard Time. Okay, so the market opened back up. So this is previous day, meaning today, but yesterday's trading day. Okay, so from right here is our high. And then from here down here, doesn't look like it has it doesn't have a lower shadow. So the bottom of this is going to be our previous day low. So I'm going to move this one up here. And now we're going to have our previous day low. That looks good. So now we have our previous week high and previous day low. They're right by each other. And we have our previous day low here, which is yellow, and our previous week low, which is blue. Okay, so now we have everything. And then again, the orange is my month. So I have the month high up here and the month low here. Okay, so that's March. It is April. So March high was up here for SPX 500 and March low was down here. So we actually pushed lower in the month of April. Okay, all right, so now we have that, and we're looking at what the market looks like. So is it going to continue to sell? Is it reversing and going into a buy? What is it doing on the day time frame? Well, it looks to me like this is our floor, and there is a potential for SPX 500 to continue to go up only if it surpasses, it clears this previous week, day, and week and day high and this previous month low. It surpasses this area here and close above it, yeah, we can definitely see SPX 500 going back up, okay? If it doesn't do that, then we could see SPX 500 staying in between these areas here, okay? And at some point breaking down, all right? And that's only if that doesn't happen on a day. Okay, so now looking on a 4 hour, I look at market structure again. That's the next thing I do. I'm always looking at what is the time frame telling me to do. Is it telling me that we should be looking for a buy because the market is buying? Is it telling me we should be looking for a sell because the market is selling? What is it telling me? So right now we have a sideways market. So we need a breakout to happen. That's it. So we need the market to break to the upside for a buy. Again, I needed to break above here. So what I'm going to do is I'm going to say, go ahead and identify this area here as the, oops. I'm going to go ahead and identify this one here as the area to break and close above. Because I already know break and close above for buy. Okay. I'm already aware of that. That's just what it is. Okay. And from the last time I marked this, looks like SPX 500 is still hovering in this golden zone. And that means, that tells me that, again, if it doesn't break and close above here, we could see our sale come back. Okay. So that's that. And then I could look for price to break and close, possibly break and close below this previous week low to tell me that we may have a strong sale. Okay. So I'm going to go ahead and do that now. And then we'll see what it looks like on the 1 hour. So break and close below for a sale. All right. And hopefully this is helping. If it's not, let me know. If it is, let me know. And if it is helping, go ahead and share with 1 or 2 people that you know are new to trading, curious about trading, struggling as a trader, can't seem to get right as a trader, whatever is going on for them. Go ahead and share this with them. You don't have to ask them, hey, did you watch it? Did you tune in? And anything like that. No, ma'am. Come in here and let daddy rest. Okay? Let daddy rest. Okay? And watch your show. All right? Enjoy your show. All right? Give me 1 second, y'all. Because see, when you have kids, they want to show out. So give me a second. Okay, so back at it. All right, let's go back to the market. Okay, so like I was saying, what we're looking for is to see if there is if the market is showing us on the 4 hour right now, because I trade off of the 1 hour. So is the market telling me that it's buying, or is it selling, or is it consolidating? So right now, clear as day, you should be seeing what I'm seeing. The market is moving sideways. It's not clearly up, it's not clearly down. It goes down, come up, goes down, come up. And now it looks like it's going to do what? Come down. Okay? In all honesty, I won't say that right now. But yeah, I've used the Fibonacci to help me identify some areas. So this red box, for people who are new and just joining, this red box represents what we call the golden zone when we use the Fibonacci tool. And that's our 50% and our 61.8% area. Okay, so this tells us that this is an opportunity for a strong retracement, meaning if price in this case is pushing up and it's staying in this area, there may be a sale on the horizon. Okay, hence why you don't see a massive push to the upside, because it's hovering in this area. Even if it's not sitting in here, it's still hovering in this area. It's staying close to the 5618, which I call the golden zone. Okay. So in this case, where price is right now on the 4 hour is in the golden zone. So until price breaks to the upside, then we won't see our buy. Okay. There's a possibility, y'all, we could see a sale with SPX 500. And that's only if things continue to be shaky in the economy, in the United States economy. We continue to have this back and forth between the U.S. and China. We continue to have this back and forth between the U.S. president and the Fed chair. We continue to see unemployment numbers increase, or they're not what they are anticipating them to be, and it's actually negative for the economy. When we see these things happening, you can bet your bottom dollar that you're going to see some type of massive movement. So with SPX 500 tomorrow, y'all, we should either see SPS 500 moving to the upside based on the unemployment claims or to the downside, whichever one, okay? Whatever the numbers reveal, that's going to tell us if we're going to see a buy or a sell, all right? So that's what we're looking at on 4 hour. This other area is called a supply zone. So at this point, there's an abundance of a supply of that particular thing, and we could see price push down, okay? So that's not a guarantee. None of what I'm showing you, especially with the Fibonacci, none of it is a guarantee. This is just like kind of like giving you an edge in the market because you're not on Wall Street. You're not talking to the big movers and shakers in the market, right? You're not talking to the hedge fund managers every day. You're a retail trader like myself. So the only thing you can do is use certain tools to help give you an edge to help you make a better decision on how you're going to move in the market, okay? So these two dashed lines are our supply zone. So if price were to break and close above here, then this would actually be one of my take profit points. I'm not going to change it. This will be my second take profit point. I'm not going to change it because if price comes in here, then I'm anticipating that there may be a sell-off, which happened over here. See that? Price came in here and then it pushed right back down. Okay? Everybody got it. Hopefully you do. So I'm not going to adjust this because this is the price is staying in this area, so it doesn't make sense for me to move it. So now we're going to go down to the 1 hour. So I see the 4 hour, I'm consolidating. The 1 hour looks like the same thing. It looks the same. It looks the same. So I have two areas for a buy. I'm going to go ahead and do this. I'm going to make the candles a bit bigger, okay? Just give me a second. I want to also see if I can find a third profit area, which I've identified here. For some of you, using the line chart may be best. It may be easier for you to identify those areas. Whatever works for you, works for you. Okay, I'm going to make this, dash line. I need this one. Okay. So whatever works for you, works for you. Okay. But if you need the line chart, don't be like, oh man, but she don't use the line chart. Use what works for you. Okay. If it's easier for you with the line, use the line chart. If it's not, don't use the line chart. Use the candlesticks. Okay. I actually can do this one too. It looks like, oh, I thought this touched it. It didn't touch it. Wait, this one touched. Oh, yeah. Okay, so you could either use this one or this one. I'm just going to count to see how many times price comes in here. This is why I'm going to use the line chart, okay? So I see one. So with this one, that's 1, 2, and then it was support. It was support again, and then 3, 4, 5, 6. Okay, that's a lot. Oh Lord, that's a lot. Okay. And then this one's 1, 2, and then it's support, and then it's support again. So that's one. This is a strong one too. If you're a swing trader or a day trader, you may end up using this top one. Scalpers, of course, you may use this one. Okay. Totally up to you. So I'm going to remove this one because that's a bit close. And this is going to be my profit area 3. Okay. But just know, y'all, there's one in between that. So price could go there as well. Okay. Got it. Good. Let's go back to the sell. So we have our buy areas identified. I'm going to go over this one more time for my people who are new to how I mark up and new to this channel. First of all, welcome and thank you so very much for tuning in. But what I want to show you guys is if you are more conservative, you're looking for a break, close, and retest. Okay, my conservative people that you want to see price come break above this area. You want it to close above here, but you also want it to retest this area as well. Okay. It doesn't have to come all the way down in here. It could just touch it. The shadow, the lower shadow, the lower wick can touch it. That's fine. Okay. Retest this area and then show you that buy momentum again. So for some people, it's one buy-in candle. For me, it's a bullish candlestick pattern that I would need to see close above here after the retest. Okay. However you trade and it works for you, continue to do that. All right. But that's for my conservative people. For my people who are more aggressive at trading, more than likely, once the price breaks and closes above here, you're taking off. Okay. You're in the trade. You're not waiting. Once it closes above, you're in there. Okay. Nobody is right or wrong. What works for you works for you. All right. So conservative, break, close, retest. Aggressive, break and close above this area. Got it? Good. Now we need to sell. So in this case, we are looking for price to break and close below here. Again, conservative, break, close, and retest. Aggressive, break, and close. All right. So I'm going to identify areas where we can possibly see profit. So I see one, and then immediately I see the second one. Now, maybe this one up here, we'll see, but I'm going to do this one right now. Okay. So I immediately see one, and then price touch here. It was in a bit of resistance. It broke above it though. It touched again here. And I could do the line chart. As a matter of fact, let me do the line chart so that way you guys can see just like I did with the buy. So we have one. And that is pretty much it with that area. Let's see if we find some more. Because SPX 500 was buying for a while. So honestly, the sale, it's not looking good. I'm not doing all that. Now I will have to go to the 4 hour. Okay. And then this next one, that's one solid. One solid. So I would more than like two. But let's go up here and see if it's this one. Yep. So this is a better one because this is one. Bring this down a little bit. So that's 1, 2, 3 in support. Bam. So I have 3 in support. So this is actually a better area than this one. But let's see. I'm going to do one more because I got 3 for the buy, right? So let me see. I see that, but was that this? No, that's lower than that. Let's see if I could find. I'm probably going to have to go to the 4 hour. Okay, let me go to the 4 hour for this one. And if y'all have any questions, feel free to type it in the chat too. If you have any questions, if you see anything and you're like, well, Leona, go ahead and type that in the chat too. So it looks like I probably should move it down one according to the 4 hours, since on the 1 hour, it only has one good touch anyway. Let's see. Back in the day. So that was a good one. That first one. Let's see. The second one is good. Good, good, good. Okay. Yeah. And then we have some more here. All right. So I'm not going to change it. Boom. We're good to go. All right. For those who are like, well, why? How do you pick those areas, y'all? All I'm doing is looking for areas where price likes to go. It needs at least 2 touches. If it has more than 2 touches, the more touches, the stronger the support. The 2 touches to the upside or more, the more touches to the upside in a peak, right? That's a stronger resistance. So our valleys, our V's are in support because price is going down and it's rebounding. It's bouncing back up, right? The more touches going down in that V, giving us a V, the more likely price is to return to that area. When we're looking for a buy, the more touches when price goes up and forms a peak, right? The more likely we are to see stronger resistance, and that means that price may return to that area to the upside. Okay, so that's what we got. Any questions on that? We have our take profit points identified for a sale, and that is only if SPX 500 sells. Any questions at all pertaining to SPX 500? TP2 for a sale. TP means take profit, y'all. TP means take profit. And that means you can pick one of these or identify your own, okay? You can pick one or identify your own to say, yep, I'm going to look at price going to these areas. Again, break, close, and retest for my conservative traders. Break and close below this previous week low for my aggressive traders. All right. And again, for everybody that's just joining, if you're new and you're just joining, y'all, this is not, I am not a licensed trader. I'm not a financial advisor. I'm sharing with you guys things that work for me, things that have not worked for me, in hopes to help you to have a better trading experience and to have a more profitable week. Okay. So that is SPX 500 is now complete. Here you go. You can take a screenshot. I'm going to do gold really fast and then USD JPY. I have to go because I got at least attempt to walk today. This evening, I should say. My back has not been the best since getting those injections, those steroid injections. And so I'm hoping that I can get at least 2 miles in tonight. It would be great to get 3. But if I can get at least 2, I'll be very happy because that will put me at 4 miles for the day. Okay. So friendly reminder for my people who are new, y'all, I do something called a top-down analysis. This is where I look at previous months, previous weeks, previous days to see how high price went, how low price went, because that gives me an idea of where it may return to. Okay. It gives me an idea of where it may return to. Again, like I said, with the Fibonacci, nothing is 100% guaranteed. The market's going to do what the market's going to do. The people who have the big money, they make the market move, not us retail traders. So all I can do is just give myself an edge by doing certain things that help me to have an idea of when I should enter the market, where I should exit, or if I should just push pause altogether and not even consider entering. Okay, because of what the market is telling me or showing me with these candlesticks. Okay, so this is the current week. This is where we are with gold right now. It made a new all-time high earlier yesterday, and then it's been selling since then. Okay, that's where we are to this week. This is last week. Last week ended in a buy. So these blue lines, I said the North Carolina blue, right? These blue lines are identifying my week time frame. I color code each one so that way I know what time frame I'm looking at. Okay, so this is the previous week high, previous week low. Now I'm going down to the day. I ain't gonna say it again, y'all, because I'm trying to hurry up. Okay, day is yellow for me, so I'm gonna go ahead and move this out the way. Oh, okay, I gotta unlock it. I'm gonna go ahead and move this on up here. Yesterday, it closed in a sale. Okay, this is today buying. This is yesterday. So I'm doing previous day high and previous day low. And just like SPX 500, the high for the day and the week are pretty close to each other, and the lows have a little bit of distance. Okay, there we go. Boom. So I'm going to save just in case. And I'm seeing, of course, gold has been buying. All right. Bam. So it looks like we have a bit of a pullback. All right. So let's go to here. So the 4 hour is showing us, I look at market structure again. Is the market telling me, by looking at the 4 hour, is the market telling me that I'm buying, or am I selling, or am I consolidating? I haven't really made up a decision if I want to buy or sell. So I'm just moving sideways. I go up a little bit, I go down. I go up a little bit, I go down. I go up a little bit, I go down. That's just pretty much moving sideways, okay? Clear as day, the market has been going up. This appears to be some pullback because on the 4 hour, I see that we have 3 buying candles. Yes, this is a bit of indecision here, but this body here is a bit bigger than both of these, okay? So this is telling me that we may see a buying market again, okay? Nothing is set in stone just yet, because for me, personally, I'm going to want to see that price clears, depending on the number of pips between these two, that price clears, breaks and close either above this previous week high or the day, whichever one. But I'm just going to calculate the pips, okay? So right now, we're still seeing that the market has been buying. This appears to be a pullback, and we may see a new all-time high. If not this week, then next week. And that's only if the dollar continues to weaken. Okay? Only if the dollar continues to weaken. All right. So there we go. So 4 hour, it did buy. It didn't come back down here. So I'm more than likely going to delete this. Boom. I'm going to do a new one because I want to see what it's going to do. What you going to do. So price came down here. This is the low before it start going into a buy, right? So let me do that. I'm using a field again. And then this is the high. And make this bigger. So now I'm identifying my golden zone, which is here. Okay. This is a new one. I use a rectangle. You can use what you want to use. Totally up to you. You don't have to do what I'm doing. Okay. What I do may be too much for you. Like, Leon, you got too many lines and boxes and stuff. It's too much for me. That's perfectly fine. Everybody trades different. Do what works for you. Okay. If this is too much for you, don't worry about it. Ignore it. Okay. If it's not and you're like, oh, I like that, then adopt it. Simple. So here's the 50%. This is the 61.8. Moving forward, I'm going to say 618. Okay. And I'm going to say 50. All right. Actually, I'm going to say golden zone. Okay. So price could come down here and then bounce up. Could. Is it going to do it? Probably not right now because it's already bouncing up off of this previous day low. Okay. All right. And then if it were to push past this, then we could go and identify our demand zone. So this is our next buying opportunity. Okay. Demand zone, next buying opportunity. Again, none of this is guaranteed. We just give ourselves a bit of an edge. If you've ever listened to Trading in the Zone, you know what I'm talking about. All right, there we go. So I delete that. Bam. All right. And so now we have our golden zone and demand zone identified. Cool. And so now I'm going to go to the 1 hour. Let's go. All right, here we go. So got this ready. Boom. There we go. So now, like I said, we want to see how many pips this is between here and here because gold is a little bit different. So it may be massive. Yeah, so this is 286. Okay, that is a big gap between these two. So depending on how you're trading, if you're a scalper, you're like, I'm in there. Price breaking close above here, I'm in there. You may trade on lower time frames, so you may be like, nope, I'm in the here down here. That's perfectly fine. As a day trader, I'm gonna want to identify an area where I could say, okay, cool. Well, price may break and close here, and we may see a buy. Here's what I'm gonna do though, y'all. I'm not even gonna front. I use the EMA right now, so the EMA is down. So I need candles to be above the EMA for me to say this is a solid buy. So that means I need price to break and close above here. I got it. You do what you want to do on a lower time frame or higher time frame, whatever you use to help you, especially with the way the market has been moving. But I am leaning more on the EMA this year because the market has moved a bit different when it pertains to gold for me. Okay. And how I trade because I use candlestick patterns to help me with identifying when to get into the market, but also when to get out. Okay. So for me, this is my area. I need price to break and close above for the buy. Okay. There we go. And then price can obviously break and close below. That's not that much here. Yeah, it's not. So I would do down here, break and close below here for the sale. Again, if you have any questions, by all means, that's not how you spell close. Good Lord. That's not how you spell it. All right, let's go. So break and close below for the sale here. Break and close above for the buy here. So clearly this is going to be my take profit one. CP1 for buy. Then I'm going to identify a second one because we had a buy here. Boom, boom. Let's go. Let's go. Let's go. And continue to share this live. Give it a thumbs up. Okay. And if you have any questions or you just want to comment, go ahead and comment as well. Okay. So this is TP2. So this is my second profit area, potential profit area. And third one is, ooh, that's pretty high. That's pretty high. I know that's got to be 200. Gotta be. Gots to be. All right, and that's 3. So, and then the all-time high, y'all. All right, again, if you are conservative, you're going to look for break, close, and retest. If you're aggressive, you're just break and close above this previous week high here, and then you take it for what it is. Okay? These different profit areas, it's totally up to you. You can pick, you can say, hey, look, I only want that 220. What was it? Okay, depending on how far it goes, possibly 316 pips or a little bit less. Depending on, you can say, hey, look, that's enough for me. I'm out. Or you can say, you know what? I want to see if it's going to go to the all-time high, but I'm going to use, let's say I may use my trailing stop loss when there's news happening. Okay? Cool. Whatever you want to do. All right? But here's what I'm going to tell y'all. I say this all the time. Please, especially if you're day trading, and for my swing traders, you know, but those of us that are bare minimum that day trade, y'all, what we want to do is look for a risk to reward of at least 1 to 2. So if our profit stands to be 300 pips, then that means that our stop loss should not be more than 150. Okay. And I don't know if any of y'all have really been trading gold, but gold have been having massive pullbacks. Okay. Massive pullbacks if you're trading on a 1 hour like myself. So you need to be prepared. If you're looking at, hey, look, I'm seeing that the past week, you know, the pullbacks have been like 180 pips or so, then guess what? This TP1 is not going to work for you. Okay? You're definitely going to need to look for TP2. All right? But again, it's totally up to you. Your strategy is your strategy, whatever works for you. But like I said, risk to reward of 1 to 2 at a bare minimum for my day traders. If you can get 1 to 3 or higher, that is outstanding. But at a bare minimum, we want 1 to 2 so we have cushion when we do lose a trade or two, okay, in that week. All right, like I said, break and close below here. If you're conservative, you're looking for a break, close, and retest. If you're aggressive, you're looking for a break and close. And that is it. That is all. Okay? Since we have these areas already here, the top of this golden zone is going to be our first profit area. Okay? I already see it. I don't need to tell myself anything else. TP1 for a sale. Then we have the previous week low here. That's TP2. This is why I love doing the top-down analysis, because the top-down analysis helps me to identify potential profit areas. It helps me to identify where I should be entering the trade. It helps me to identify where I should be exiting a trade. Okay? I don't have to really guess unless it's like a very large gap. Then I have to go find areas of support and or resistance. Okay, so we have 1, 2, 3 for the sale. We have 1, 2, 3 for the buy. Then again, y'all, if you want to hold out for all-time high, totally up to you. All right, so you got gold knocked out. Take your screenshot. And then last one is going to be USD JPY. I'm not going to take my time with this one, y'all. I'm going to move fast because it's almost 7 p.m. Central Standard Time, and I need to go. Do you hear me? I need to go. I need to get to getting. Get to getting. Don't look like I'm going to walk tonight. Doesn't look like it. All right, so let's do this. And keep sharing the live. I appreciate y'all. Every person that shares, every person that comments, every person that comes on here, gives it a thumbs up. Every person that subscribes, every person that presses the notification bell. That is a bit of support that I am very, very grateful for, because if I'm giving away free game and you're willing to support me in that way, that means that I must be doing something right. Okay? So I appreciate it. All right, so I'm going to delete this one, because that's old. Okay, so the previous week low is at previous day low is now the previous week low. Did I lock it? Yes, I did. Okay, and then I'm going to move this one. Bring it on down. So right now, USDJPY is buying this week. Last week, it was selling. All right. And the week is showing us sell. And then today, this is current day. And this is previous day. So again, just like gold, SPS 500, both the previous week high and low are very close by. And, and the low, same thing. Very, very close. Okay. There we go. All right. So day has been selling as well. Looks like we may have a push to the upside. But again, we'll see on the 4-hour if we get that break and close above this previous week and day high. We need that break and close above here. I already see it. So we're going to do break and close above. We're going to go ahead and do it now, because I already know. All right. Okay, so 4-hour structure. We've been selling. Looks like this is our bottom and this is our reversal. Okay, and the EMA is actually showing us that we have our turnaround. The candlesticks are now above the EMA. Okay, if we have a break and close above this, we definitely indeed have our buy. This old golden zone here, I'm going to leave it, because if price does come here, then it may push back down. Again, there's no guarantee, but it may happen. So I want to make sure that I keep it there. All right. And then I'm going to leave that old supply zone as well. All right. So now I got that out the way. Go to the hour. I already said this is going to be my break and close. So let me go right now. Boom. And identify. Let's see. How far is this? Where it's at right now? If price comes up here, how far is that? 100. But see, the EMA is here. That's a lot. I'm not going to do the sale right now, only because this EMA is way up here and it may come up higher. So I would need to identify later. I would probably need to identify another break and close area for the sale, because it may end up being here. And that's only if the EMA is closer. But I don't like that, because that's too close. I'm going to leave this previous day low for now. Break and close below for sale. Okay, there we go. All right, so now we need to identify our profit areas. So if the US dollar has some form of strength or continues to have strength, then we're looking for a buy. And so I'll change it to a line chart in a second if I need to. But I see one, and then it was support. Support. Let's see. If I have to go to the 4-hour, I will. Hopefully I don't have to. But it's looking like it. It's looking like it. Yep, I got to go to the 4-hour. Okay. Good Lord. Okay. So that was a lot of touching there. Cool. So that's one. And then let's see. Then looks like over here. 1, 2. Okay. This one looks like we have a lot. 1, 2, 3, and over here. Price open and push down. So that's 2 and then 3. Okay. Now, let me do this. Bam. Okay, again, you need a risk to reward of at least 1 to 2 for my day traders out there. If you're scalping, oops, not for sale, for buy. If you're scalping, you do what you do. Okay, but for my day traders, we're looking for at least, at a bare minimum, risk to reward of 1 to 2. If the first take profit does not give you that risk to reward of 1 to 2, then you should be looking for the second take profit to do that. Okay, and then we're going to use the bottom of this, which is our, this looks like the month. I'm trying to touch the month, but it's not letting me do it. There you go. That's CP3, because that's the bottom of, that's not how you spell buy. There we go. Okay, so we got 3 profit areas. And then again, if you want to, you can actually find an area in between in this golden zone and then use the top of this as another take profit point. Totally up to you. You don't have to, but that's an option. So we're looking for break and close for my aggressive people, break, close, and retest for my conservative traders. Okay, there you go. And then a sell. And that's only if things do not turn out the way it is anticipated. That's one area. This is a second. And then we should be good. I need to find one more if I can. If not, I'm just going to leave it at 2 because I'm not about to go all the way back here. Yeah. All right. We're just going to have 2 for the sale right now, y'all. All right. So we have 1, 2 for the sale. And again, if you have any questions, feel free to type it in the chat. I know it's a little quiet. I normally have music, but something has been up with my computer lately. When I'm sharing like sounds, especially like YouTube, it's not working. At least that's what I'm being told when I'm on Zoom. So I don't know if it's a difference between using Zoom and StreamYard, like if that sound makes a difference. But that's the reason why I just didn't do it, y'all. I normally have music playing in the background, but I was like, not today. Okay, so there we go. So you can take a screenshot. This is USD, JPY, USD, JPY. Bam. Okay, break and close above. These are our profit areas. Again, this is not a requirement. This isn't a guarantee that price is going to go to these areas. Okay, anything can happen in the market. Anything can happen in the market. We look for high probability setups. We look for things to tell us like there's a potential for the market to go in our favor, but anything can happen. Okay, it could be going in a buy and then news is released and then hedge fund managers are like, sell. Okay, that can happen. It happens. So we don't want to lean so heavily on one thing. We want to identify our exit strategy, but we also want to have our entry strategy as well. Okay, so that's it. That's all with that. So let's go and wrap this up, y'all. You should have all 3. You should have USD, JPY. You should have SPX 500, and you should have gold. Like I said, I don't do Bitcoin on here because not too many people are equipped to mentally handle the volatility in cryptocurrency. So that's the reason why I don't mark up Bitcoin anymore live. Okay. Now, for my people who are curious, like you're like, I kind of want to get into Forex. I see what you're doing on here, but I really want to learn like how you're trading because I like the idea of the candlestick patterns. I like the idea of the top-down analysis. I just need a bit more clarity on that. These sessions on Wednesdays are not designed to teach like that. It's for us to be able to look at the market, to be able to identify potential trading opportunities, and I also talk about some of the things that is happening in our economy that could impact what we are looking at trading this week. Okay, getting the Forex starter kit is what's going to help you to figure out if this is something you really want to do, if you want to put the time into it, but also get you started trading. Okay, there's 4 modules of trading basics. It's giving you a lot of information. You're going to get quizzes after each module. You get trading reading material as well. And once you finish, you get a certificate of completion. So if you're like, oh, that sounds interesting, y'all, right now, what I'm doing, because the economy is like so jacked up, I know there are people who can use a break. And normally I charge $49.99 for it, but I decided, me personally decided, that if I was in a position of someone else that really wants to learn, but you don't have a lot of disposable income right now, and you're like really penny pitching, but you want to learn a skill, like, man, like I know I could learn, but I just don't want to put a lot of money into it right now. This is going to be for you. Okay. So it's $9.99. I'm going to leave it there until the market is showing us otherwise. And I'm talking about our economy. It's showing us otherwise. Then it'll go back to the regular price. But right now, I feel very strongly I want to keep it there. So that way, you know, it's a sandwich at your favorite fast food restaurant. It's a, you know, your favorite drink or whatever. Like, that's the price of this Forex starter kit. So hopefully you look at it in a manner that it's intended. Hey, look, I could sacrifice my favorite drink for the week or for a day and pay for this starter kit, and then set aside the time to study and apply, and then start coming on here, and you should be able to ask your questions. You should be able to see what I see. You should be able to talk certain trading lingo with me because you have taken the time to really study this Forex starter kit, okay? So scan that QR code, or you can go to the website, all right, prosperitycalls.com, and you'll be redirected to sign up for the Forex starter kit. All right. So next Forex live market analysis is going to be April 30th. Same time, y'all, 7 p.m. Eastern, 6 p.m. Central. Go ahead and set your calendars up right now. Invite some people that you know are interested in trading or new to trading, or they're just plain struggling with trading. Invite them. Give them a nudge, remind them on the day of as well, so that way they can tune in. And subscribe to this channel if you have not done so yet. Give this channel a thumbs up. Give this video a thumbs up if you have not done so yet and you enjoyed it and you learned something new. And also press the notification bell if you're not part of the Prosperity Calls community yet, but you plan on it. But go ahead and press that notification bell, and I see y'all next week. All right. So I leave you with my favorite quote, and that's from the legend. His name is Arthur Ashe, and he says, start where you are, use what you have, and do what you can. Y'all have a good one. Until next week.